It is June 14th, and this is the video log. It takes 30,000 to a million. I'm super excited to make this video because I haven't made one in a long time. I've been super busy, but now I'm not. I mean, I still am, but this is happening. After I take you through the account, I'll show you all of my positions, all my option plays, all of my progress, all of my equities, and further in the video, when you see the screen again, when I'm full blown on the screen, that means I'm probably going to be talking about JD, consumer, internet companies, um, demographics, and things that are actually interesting rather than just looking at ticker symbols. So I'm going to dive into the account. I'm sitting almost at a new time high again. That's $165,000 and 356. So I'm going to run through the positions on the right here. First are the options. These two Apple calls that I've had for about a year and a half now are almost up. This is the final week, and I've held them all the way till now. So they're up $620 today. Actually, it would be interesting to click on them and find out exactly how profitable they are. So their market value is $11,000 after a year and a half. They have returned 627% or $9,571. Very cool. Next are some Baidu options that are going to expire. Worthless, shame, pity. And then some EBIX plays, mainly put sells and call sells. One JD call here that I've sold. You can see the progress on the right. Robinhood has done a change on how they display this. So now it displays the daily change and the percentage daily change on top of that. EBIX had a bad day. That's why these calls here are actually gaining in value, or more accurately said, they're erasing liability. So you can feel free to pause the screen at any moment to try to find out the exact positions. I'm not going to spend much time talking about any of these. So I'm just going to let you pause and figure out all that you need to know. Within the screen, every piece of information that you might need is displayed. Here's my Apple position. 504 shares now. Had a very nice day, up 2.22%. EBIX had even worse day in percentage terms, minus 3% around. The Alibaba and JD stocks, the China consumers, made a little bit of a comeback here during the middle of the day. Everything else further down is a bit of a non-event. The positions that are at the top are the ones that are weighted the highest in my account. The ones on the bottom, I've structured it that way, are the least. If you want to see the account tab, this is what it looks like. You'll see that I'm holding a record high amount of stocks and options, sitting at $226,000, which means that 61,000 of those is on margin. Now I'm going to be decreasing that margin. In fact, as the Apple calls expire, I'm going to get that hopefully over $9,000 to erase some of that margin. And then I will look to sell calls and other things to try to reduce this margin as I go. Also, some other things might sell as the call options expire, and I think all will be well. This is the account sorted by total equity. So Apple, EBIX, realty income, emerging market, dividend fund, and that's by total return. Excuse me. Those are our most successful ones. This is by equity. So these are my top 5 positions. Pretty much make up 6 positions. Pretty much make up like the biggest bulk of the account. Apple, EBIX, realty income, Alibaba, JD. Then I have emerging market funds and emerging market dividend funds. The rest of the positions are not very big. They're 5,000 or less. So these are kind of my main positions: 65,000, 57, 16, 16, 15, 15. Most conviction in Apple, therefore, is the biggest position. EBIX is now grown to be a very sizable position. So these two companies make up a very, very large portion that they count, way more than 50% at this point. Probably about 60, 70%, 65% maybe. So that's the account tab. If you're interested in the performance, my daily performance is $1,160 minus 67 in the aftermarkets. That would be 0.71%. The weekly performance is 4%. I've had a very good month rebounding off of these lows. I was as far down as 142. Now I'm 14% up after month over month, or $20,000, which is very nice. I'm enjoying these gains. Very nice slope upwards. Hopefully it continues. We'll see. The Chinese stocks have not done very well for me lately. However, I'm expecting them to pick up pace as the year goes on. Now, I want to talk about these Chinese stocks, okay? I've done a couple videos on them already, and I've explained some of my rationale as to why I'm investing in these stocks, but I'm really bullish on the Chinese consumer, and I have some figures here that I want to kind of explain my rationale even further. So what I'm going to do is I have 3 tabs, I guess, to shed some perspective on my way of thinking when it comes to these investments. Now, I'm not going to go into the actual numbers, which they are a little bit undervalued by standard, accounting valuations, and of course there are risks with any company, but particularly with these Chinese companies, there is a slight delisting risk. So you may have to buy it through Hong Kong. There's also trade war risks and other unforeseen risks, but CPP or CCP risk, Chinese Communist Party risk. So there are many risks, regulation, etc. However, every company carries risk, and these companies are valued very cheaply compared to the way I look at them outside of their numbers. So the first thing I want to take a look at is the heat map of Finvis, which I think is kind of amazing. This just dawned on me, but I was looking at the week performance, right? My bad, I didn't go full screen. So this is the full screen. I told people in the beginning of the video that I'll be at full screen when I start talking about Chinese stocks, etc. So first thing I want to talk about is the Finvis heat map. Then I'm going to talk about why my perspective. I'm going to shed some light on my perspective when it comes to investing in the Chinese consumer, and we're going to be looking at things like demographics and things like that. Okay. So first, I want to explain or show you one thing I noticed about the heat map on Finvis and how amazing it is. So we're going to go into the browser now, and I'll show you what I'm talking about. So this is the week's performance of the entire global market. Some of it's cut off, but you don't really need to know all the ins and outs. So on the top left, you see the sorry about that. You see the technology. On the right, you see the communication services, consumer cyclical, etc., etc. You can see in the white font above the sections of the map what kind of sector these companies are in. Now, what I found really amazing is that if you are looking at the top left, these are kind of like the newest, most emerging type of sectors. Okay, so the technology, the communication services, these services didn't really exist. Like technology sector didn't even really exist 30 years ago. So it was very, very tiny. And then communication services is next. The invention of the telephone wasn't that long ago. All right. Before that, there was no communication services. So consumer cyclical, like Amazon, all these internet retails, they're big. They're fairly recent, right? And then, sorry about that. I keep scrolling over the map here. And so consumer defensive, these are things that have been around for a very, very long time, and they're kind of safe and perhaps have decreasing revenue over time, but that there's a steady demand for their products, and so it isn't likely to go out of business very quick. Let's just say that. So as we go from left to right and top to bottom, we can go, it looks like all the sectors that are on top left are newer, less mature, growthy, sectors and companies, and the bottom left is kind of the oldest sectors and companies. So if we think about the very, very bottom right, sorry, not left, the bottom right is basic materials. I mean, that's the first thing there was. At one point, the entire market was basic materials, right? Like, hey, I'll trade you some copper in whatever, copper bars for copper wire for, I don't know, um, an iron ingot, whatever it's called. Okay, some iron nails. So that's all there was. Those were the entire companies, right? So then you have industrials, which is very mature, and then utilities, and of course healthcare, and on the left financial. Financial has been existing for a long time as well. Financial sector, but the top left are pretty new. So what I notice here is I try to imagine what these sectors would look like 20 years ago, 30 years ago, and what their proportional size would be on this map. And I think the basic materials, industrials, were probably at one point, real estate, etc., would probably one point much larger portion of the overall market capitalization, energy, etc. But now it's really shrunk. It's just there's been so much growth in the other newer sectors, and that trend is probably going to continue. I mean, I think that all the old sectors will continue to feel pressure, but they will always have value. You cannot go without. Is the camera shaking? Huh. Anyway, you can't go without raw materials. I mean, you need them. So there's those sectors are always going to exist, and there's always going to be value there. However, as a proportion of the overall market, right, as a ratio, it will shrink. So I just thought that was very interesting, but it's just one extra thing that supports the growth of these consumer cyclical internet companies. Um, it's just the way things are going, convenience, etc. I heard someone, let me talk about this for a moment. I heard someone talk about the how companies like Apple and, for example, took things like the camera, the notebook, the compass, the telephone, the calculator, the computer, right, your TV, everything, and shrunk it down into something you can carry in your own pocket. So they're crunching complete industries and products into this tiny, sleek device, and they collect all the value from doing that. This is, by the way, I just want to make sure, I don't know who's talking about this. I don't want to take any credit for this. And Amazon, of course, is shrinking stores, right? They're shrinking brick and mortar stores, and they're collecting the value for shrinking those stores, for putting them under their umbrella. So of course, JD and Alibaba are doing the same. So they're under that category of shrinkers. Okay, it's probably not a very good nickname for a category. Oh, by the way, just a quick comment back on the heat map. Cars, right? Auto manufacturers are towards the top left. Cars didn't even exist, right, until 120 years ago. They weren't around. So, anyway, further, moving on. Now that I've spoken a little bit about why I'm bullish on Baba and JD to start with, I want to talk about China in general. Okay, you can see, before we go into this, I want you to notice the size of Alibaba and JD compared to Amazon. I don't want to scroll over the map because it's gonna go into the tickers again. Look at how Amazon's market cap is bigger than pretty much all the Chinese retailers combined. So, I want to talk demographics now. So, here we go. We have, first of all, almost 80% of the Chinese people are participating in their labor force. Now, whatever, that doesn't mean much, but what I want to point to is here. Gross domestic product per capita in People's Republic of China. So Chinese people are over 10K, over 11K of GDP per capita in China. You know, that doesn't seem like a perhaps doesn't seem like a very large amount. GDP in a country like Germany, for example, is it looks like 46K, maybe 47. And I think in the United States is somewhere around the same. I'm not sure. We're gonna look. We can look it up, but actually, we will look it up in a second. However, you got to take into the account the amount of people that China has. So fine, 11K per person. However, if I scroll down, I'm going to scroll down quickly here until we get to population. Population in People's Republic of China is 1.4 billion people. You can see over here on the right how it compares to countries like Russia, UK, and Germany. You know, US probably has like maybe 400 million, I'm not sure, 450 million. It's like a third of the Chinese people. So let's say we have Amazon serving as the sole um, online retailer, serving 400 million people. Well, JD, Alibaba, and PDD are serving 1.4 billion people, yet their capitalization is much smaller than Amazon. Their capitalization combined. Few things that I like about this as well is that the Chinese companies have competition amongst themselves. Right now, Amazon doesn't really have any competition when it comes to other retailers, right? They have competition with brick and mortar, and they have small competitors like maybe eBay would fall into that place or something like that, but really none. All the other online retail oriented companies have a different business model than Amazon, and so no one really competes in that strict business retail mall type of space. So I think that the Chinese companies are hungrier. I think they're hungrier to grow. I think they're hungrier to capture market share, and I think they're hungrier about capturing global market share, not just market share within their country of China. So for that reason, I like these retailers even more. Now, I want to explore some demographics a little bit more. So we have the population. Population growth rate is not that great. However, they just allowed people to have up to 3 kids now. There used to be a one-child policy. Now, then there was two-child policy. Now there's three-child policy. Up to three children you can have as a family. So maybe some of the kids will finally get documented and be able to join society properly. Now, of course, these are. I'm not gonna put my opinion on these kinds of laws, but it is what it is. So up to 3 children, which is hopefully going to accelerate this growth a little bit, because the demographics of China are not looking very good. It's full of, you know, it's going to be full of a lot of old people and not too many middle-aged working class males, which are going to be, by the way, very motivated, right? Because when you have when you're allowed only 1 kid, even only two, some cultures prefer one type of sex over the other, and so it skews the numbers, you know, ethically or not, in one direction. So the male population, I think, I actually don't have the numbers to back this up, but I've heard this. Perhaps I'm just spreading rumors. But anyway, I think this population is going to be very hungry, and they're going to work really, really hard in order to make things happen for themselves, especially since culturally, you know, the Chinese, from what I understand, put a very, I guess, again, I might be wrong, and please comment and let me know if I'm completely wrong about this. They place a great emphasis on, you know, the provider role for the Chinese man. So it's very important that they have a house and things like that. Um, so I think they're going to be very motivated to work their asses off and make things happen. So we have we have 1.4 billion people that are hungry to make something of themselves materially, and hopefully some new kids that they can be even further motivated to provide for. So there's another figure I want to really emphasize here. This graph demonstrates the urban versus rural population of China. Now you can see that ever since they opened up the economy a little bit, the urban population has skyrocketed relative to the rural population. And what does this mean? So these lands have already crossed. Now they have an urban population of over 800 million, probably 900 by now. So what does this really mean here? It means that for companies like JD and Alibaba, etc., they will have even more access to more people. So if you think of the urban population, which is where most of these companies operate, as the population of the country, that's increasing at a much greater rate than the population growth of the entire country. So as all these rural population are moving into the cities, that just means more customers for these types of companies. Now, so I think that's extremely bullish for these companies for sure. I think I'd see a lot of growth ahead. Now, what else am I going to look at here? Oh, some interesting fact is, I don't know how true these figures are, but CO2 emissions per capita in People's Republic of China is actually going down. So I think that the Chinese, apparently this data, clean energy initiatives, it seems to be taking some kind of grip. Okay, one important thing that I wanted to show you here is something that I thought was funny anyways when I was doing this type of research, I guess you could call it, is this is the GDP per capita of, I guess this is, okay, of these countries that are listed here on the right. So we have China. I don't want this white thing to appear, but you can see that China is in the dark red down there at the bottom next to Russia, which is the purple line. And they're far below countries like Germany and United Kingdom. And all the way down in there in the bottom is Egypt, which is, an African country, and they're operating by different standards over there. It's tough. So I want to add in the U.S. on this graph. So we're going to add in the U.S. I want you to notice something really funny. All right, USA added. Look at this straight line. Skyrocketing. Now, you might think, okay, this is rigged, right? But actually, I think it's just because everything is measured in US dollars. So that's why the line is so smooth. The US has the reserve currency, and since it's measured in that currency, the curve is smoother. If we were to measure this in the Chinese yuan, then the graph for the Chinese would be smoother, even though it's fairly smooth here since they've been kind of pegged, right? But let's say the Russian ruble, the Russian graph would be a lot smoother. Actually, let's take a look at the Chinese smooth graph. There it is, gross domestic product per capita. It's a pretty smooth line. It looks a lot like the US one because they're somewhat pegged. So anyway, I thought that was interesting. But look at where United States is, 2019 data, 42,000. No, I'm sorry, 65,000. I was reading UK. 65,000 per capita. That's really high. I think that's probably one of the highest in the world. Maybe behind things like places like Singapore or perhaps Hong Kong or some of these smaller countries. But I don't think there's a major country that's comes close to that. So U.S. economy is doing well, relatively speaking, at least in the average terms. I can't speak about median, but the mean is definitely doing very, very well. Mostly probably because of all the biggest sector that we saw here on the heat map. These, by the way, are pretty much all American companies. I mean, there are very few companies that are outside of the U.S. here. I can immediately just point out to Taiwan Semiconductors in the top left there. But as I'm looking through the list, like Microsoft, Adobe, Square, Oracle, Apple, Intel, all these companies, they're just right here in Silicon Valley, right where I live, apparently. And even as we go to the right, Google, Facebook, Amazon, all these big things, they're placed right next door. So Silicon Valley is really pulling up the capitalization here, and of course the GDP. of the United States along with it. Now, I've shown you some population demographics. I think I made my case about even further population growth with this graph here, the urbanization of China, and I've related it to the capitalization of JD and Alibaba and PDD versus Amazon. And I think that from this perspective, kind of like a bird's eye high perspective, I think it really makes sense to invest in the Chinese retailer as they seem to be gaining GDP, GDP per capita very, very quickly. Their incomes are going up very, very quickly. And I think that they'll be able to afford some of the things they're actually making, especially since the expansion of their economy is doing so well and they're starting to reach into other countries that are nearby. I know that, for example, Alibaba JD are buying things that are in other countries like Vietnam and etc., Southeast Asia and whatnot. And so they're trying to have a global reach. Alibaba already does business with other countries like Australia, the U.S., etc. They have AliExpress. That's all the young kids are buying things from AliExpress now. They're buying $5-10 clothing and for their I don't know anime outfits and whatnot. So people are using AliExpress. People are buying things. Retailers are buying things from Alibaba, um, or for bulk purchases, etc. So it's being used even in the U.S. here. I think it's got a very very big global reach. So for those reasons, apart from the numbers, which I haven't mentioned at all, which are great, and you can look at another video to find out the numbers. I think other people do a better job than I could, even though I tried to go through the numbers a little bit of these companies. But the numbers are great, and also the potential from this kind of high bird eye view is very very good. So I'm very optimistic. I just don't know, of course there are risks, and I don't know what the time frame will be like for these things to unfold. However, I have bought plenty of calls on JD, and I have plenty of stock of JD and Alibaba, $30,000 or so worth at the moment. And I'm just going to be patient and kind of wait it out. I don't know if I'm going to be selling call options against them, which is probably a bad idea because part of my investing principles is that I'm not better than the market, right? So I'm not going to tell the market what you should price things at. So I'm supposed to be selling calls and puts, but it just seems like such a foolproof strategy, and of course it might go wrong because I'm talking about it like this, and of course there are risks that nobody sees, and things could go wrong, which just reminds me that investing in the market is very risky and it's not for the faint of heart, and that you have to be very careful with the leverage. Even though I am leveraged up, I'm not that levered up, so be careful with leverage. And also make sure that if you don't understand what you're doing, to consult with a professional investment advisor and let someone else take care of your finances. But since you're here to try to take control of your own finances, which I applaud, and I think that I support that motion. It's just that you gotta be tolerant of the risks. Like my account went down $20,000, and I had to be fine with that. In March 2020, my account went down 50% or more, actually, more than 50%. Went down like 60% from 90 something to 40. And I was fine. If you don't believe that, you can go back in the videos and you can see that I was still smiling and still in good spirits, and I was looking to go really aggressive, and that's when I bought my Apple calls. So you have to be able to handle big swings because the markets aren't predictable. It's not like buying a house that you can just live in for the rest of your life, right? Or buying a brick of gold that will never go away, never decay. So it's not that safe of an investment. If you want safe, buy some real estate, buy some gold, and you can use those as your saving vehicles. All right, I've talked a lot for today. I think I've made my case on everything. Luckily, I had enough energy to make a 30-minute video. That's insane. And hopefully you got some type of benefit from all this. If you did, let me know in the comments below what you found useful so I can perhaps provide further commentary on such topics in the future. All right, that's it for now. Peace out.